We're going to do a brief video on oil price, crude oil trading, and we're looking at a daily chart of crude oil futures. This trading symbol is CL. It's on the NYMEX exchange. Again, it's a daily chart. It's got three moving averages on it. The green is a 5-day, the red is a 20-day, the blue is a 200-day. And we'll first go back here, crunch this in a little bit, and take a look back here at December 21st. And this is before the invasion of Crimea. And as we can see, crude oil down here, futures were about $65 a barrel roughly. We crossed over the 200-day moving average after we had a false test of it here, and we started a very nice low volatility bull market rally. You can see how great it respected the 20-day moving averages, red line, and even the green 5-day moving average. This is moving averages of the close. They were very well respected, and they looked really good. Here's where the funny business started. This is about when Ukraine was invaded, and you can see we got a spike from a high 80s all the way up to the 130 range. The interesting thing to take a look at is we went sideways from about March 7th all the way over to towards the end of May, made an attempt to make some new highs in the middle of June, failed, and now we've gone down, respected the 20-day moving average, and we're now testing to see if we're going to be in a bear market for crude oil, which is amazing when you consider we're still at war. Ukraine and Russia are still at war with each other. So this is an amazing development. Crude oil has definitely started to break down. There's no guarantees when you're using moving averages, but you're getting significant number of closes here, maybe more than a week, approaching now 10 days of closes below the 200-day moving average. You have a confirmation with both the 5 and the 20-day moving average closing below the 200. So that's a very, very good indicator that this market is weak. Who knows why? I don't get into the fundamentals on these videos usually, but this is clearly, from just a purely technical perspective, a market that doesn't have a whole lot of steam to the upside and is perhaps beginning to roll over into a bear market. I would expect to get a close above the 200-day moving average, probably around the 100 range. You can easily get that. You could easily test 105, and you're probably going to see that by the middle of September. You get some back and forth in here and some testing to see if there is buying interest above the 100, 105 level. But if that fails and we get significant close again below the 200-day, my guess is this is going to move not necessarily into a bear market, but into a market below the 200-day moving average, with a price probably close in the 80s, somewhere down in here in the low 80 range. And it'll probably stay around in there until we either get some more technical visibility of what's going on, or we get a resolution with this Russian-Ukraine problem. So that's the way I see it now. A rally up to the 100 to 105 range is possible, and then a decline probably back down into the mid-80s range. All in my opinion, all for entertainment purposes only. Let's take a look down here and see what RBAM Research says about it. RBAM Research puts out these algorithmically generated entry prices every day before 7 a.m. These are set up for Monday the 22nd. Today is Sunday the 21st, so these are coming out tomorrow, and you can see we offer 1, 2, 5, 10, and 20-day holding periods for crude oil futures. Again, these are symbol CL, and they're on the NYMEX exchange. These are futures. So these are listed every day, either a buy or a short, and we can see here that for tomorrow they're listing 85.88 for a one-day hold. That basically means you would buy, assuming your own independent analysis says it's a good idea, you would buy in this range and hold for one day, which is one trading day. You close it out at a loss at the end of one trading day if you did not get a profit, and you take your profit as soon as you got it if you did get a profit. So buy Monday, close just before the end of trading Tuesday, and then the same thing with the rest of these. Buy, hold for 2 trading days, 5 trading days, 10 trading days, and 20 trading days. Again, this whole period's a worst case. You always take your profits as soon as you get them and close out worst case with a loss at the end of the prescribed holding period. So that's how these work. Tomorrow they're indicating buys. You can see the prices here. This is also indicating a secondary buy price. This is a higher win percentage. If the price hits this, you could consider, again, if your own research said it was a good idea, consider buying at this higher price as well. You could either enter here and enter again here, or just skip this one and buy this one, depending on what the market did. And this has a higher win percentage. It would buy, it's the nature of the system, generate fewer trades. That's why we list both of them. Sometimes this line will be empty. And that's how these work. They're available 7 a.m. Monday through Friday. on rbamresearch.com. They're absolutely free. You can get 190 stocks, major forex pairs, crypto, and the major futures, of which, of course, crude oil, as we're discussing, is one of them. You can get them all for free, no credit card required, at rbamresearch.com. You just sign up. There's a link in the description. If you like this video, please click the like button. If you want to subscribe, please do that. If you have any comments on how we can improve, please leave them in the comment section. Keep in mind, everything that you've heard or seen is for entertainment purposes only. It's all opinion only, and you definitely trade at your own risk.